What if I told you that right now, as you're watching this video, China is quietly executing a financial strategy that could fundamentally reshape the global economy? And the crazy part is, it might actually be working. Picture this. It's early April 2025, and something unprecedented happens in the bond market. China starts dumping US Treasury bonds at an alarming rate. Not just a little bit, but hundreds of billions of dollars worth. This isn't just some routine portfolio adjustment. This is economic warfare disguised as financial strategy. Here's what's happening behind the scenes. The trade war between the US and China just reached nuclear levels. President Trump slaps China with massive tariffs, China retaliates, and suddenly we're in a full-blown tariff escalation that spiraled completely out of control in just 1 week. But China's response goes way beyond just raising tariffs. They're playing a much deeper game. When China sells US Treasury bonds, something fascinating happens to our economy. Bond prices fall, which means interest rates shoot up. And when interest rates rise, everything becomes more expensive. Your mortgage, your car loan, your credit cards, everything. It's like China found the remote control to the American economy and they're pressing all the wrong buttons. But here's where this story gets really interesting. There's a theory floating around that this entire situation might be intentional. Not from China's side, but from ours. Remember Scott Bessent? He's Trump's Treasury Secretary. And back in the 1990s, he helped George Soros break the Bank of England in one of the most legendary financial trades in history. Let me paint you a picture of what happened back then. The UK was trying to keep their currency, the British pound, artificially strong through something called the European exchange rate mechanism. But their economy was weak, inflation was high, and they were burning through their reserves trying to defend an overvalued currency. Soros and Bessent saw the writing on the wall. They realized the UK couldn't keep this up forever. So they borrowed billions of pounds and sold them short, betting that the currency would eventually crash. The pressure became so intense that on September 16, 1992, known as Black Wednesday, the UK was forced to withdraw from the system entirely. The pound crashed, and Soros made over $1 billion in a single day. Now fast forward to today. China finds itself in a remarkably similar position. They're caught between two impossible choices. Option 1, let their currency weaken, which would help their exports but could trigger massive capital flight and potentially destabilize their entire financial system. Option 2, defend their currency by selling US dollars to buy yuan, which requires them to dump US Treasury bonds. China chose option 2, and that's exactly what we're seeing play out right now. From the outside, it looks like China is attacking the US financial system, but they're actually doing this to prevent their own economy from collapsing. They have no choice. This creates a fascinating chess match between two economic superpowers. China is asking, how long can the US tolerate high interest rates before their economy breaks? Meanwhile, the US is asking, how long can China keep selling their dollar reserves before they run out of ammunition? The stakes couldn't be higher. The US has to refinance $9 trillion of debt in 2025. If interest rates stay elevated, that's going to cost American taxpayers hundreds of billions of additional dollars. Meanwhile, China's foreign reserves, while massive, aren't infinite. Every month they defend their currency, they burn through more of their dollar stockpile. What makes this even more complex is that both countries are experiencing capital flight. Money is leaving China as investors worry about currency devaluation. But money is also leaving US markets as investors adopt a wait-and-see approach to this unprecedented financial standoff. The Federal Reserve finds itself in an impossible position. They might have to restart quantitative easing, essentially printing money to buy treasury bonds and stabilize interest rates. But that could reignite inflation just when we thought we had it under control. The worst-case scenario? Complete financial decoupling between the world's two largest economies. Imagine two separate economic systems, two different reserve currencies, and a fractured global financial order. We're not there yet, but every decision made in the coming months pushes us closer to that reality. So what does this mean for regular people like you and me? Higher mortgage rates, more expensive car loans, and increased uncertainty in financial markets. The bond market, which most people never think about, is suddenly dictating everything from stock prices to Federal Reserve policy. But here's what I find fascinating about this entire situation. Nobody, not even the people making these decisions, knows exactly how this ends. We're witnessing economic history being written in real time, and the outcome will shape global finance for decades to come. Despite all this uncertainty, I'm staying the course with my investment strategy. I continue dollar cost averaging into broad market index funds and Bitcoin. During volatile weeks like these, I actually buy a little extra, taking advantage of the discount that panic selling creates. The key is having the knowledge to understand what's happening without letting fear drive your financial decisions. This isn't just about China versus America, it's about the future of global finance, the role of the dollar as the world's reserve currency, and whether our interconnected economic system can survive this level of strategic competition. The answer to that question will define the next chapter of global economics. If you thought China's financial chess match was wild, you won't believe what went down in our last episode. In that video, we break down how the dollar was fundamentally reset, what the market moving alerts really mean, and why every investor needs to understand this shockwave before repositioning their portfolio. Click the link on screen now or check the description to watch it next, because understanding the reset is the key to navigating what's coming.